This week, the IPO market is recovering from the holiday, with the schedule still being on the lighter side, but picking up. I see it as the calm before the storm, as we are seeing some big IPOs brewing, with some of them going public as early as next week. Today we talk about what's on this week's calendar, plus I'll give you brand new information on the bigger ones coming up, Doordash and C3.ai, who just set the terms for their IPOs and some breaking updates as to when they could start trading. Stay tuned. Welcome to the Healthy, Wealthy, and Wise channel. As always, I want to thank everyone in the community for coming back. And due to the new Palantir videos that I put up last week, we have quite a few new subscribers, so for some of you, this might be your first time watching our weekly feature, IPO This Week, where we talk about all the big and not so big companies going public, whether it's by traditional IPO, a SPAC, or direct listing. We'll be talking a lot more on Palantir in future videos, but this weekly show could help you find the next Palantir, before it explodes. Its purpose is more meant to give you overviews than to give you deep analysis, but for the companies that have a lot of interest in the community or ones that I feel could be a diamond in the rough, I follow those companies up with more dedicated and more analysis type videos. Today we'll start off by me giving you overviews and IPO details about the new companies looking to go public this week, as well as companies that have locked up shares expiring. For some of you newer to the channel, if you're looking for more information on the lockup as well as quiet periods and why we cover them, I have a video detailing the IPO process and how I applied it to Albertsons companies, which IPO'd earlier this summer, and that video covers these topics, so definitely check it out. I'll link it for you. And after we go through that agenda, I'll give you some brand new details and updated filings from Doordash and C3.ai, so stay tuned for that. But first, let's kick this week's episode off with the companies that we expect to go public by a traditional IPO this week. Going into Monday morning, I was only expecting one, but that number just swelled to 5. Due to this late notice and my own limited time, these will be quicker than normal overviews that I'll give, and I'll credit NASDAQ.com for the information. And I also don't have the IPO chart I usually put together, so sorry about that, but again, it's just a personal time crunch for me. I just want to make sure I get you the information as timely as possible. As I dig into them and find I have more to share, I'll post some updates for you. With that in mind, kicking off the week of November 30th, we have 17 Education and Technology Group, ticker YQ. The Chinese education technology company's in-school classroom solution delivers data-driven teaching, learning, and assessment products to teachers, students, and parents across 70,000 K-12 schools. This is another one of those companies that were positively affected by the pandemic as demand for online educational tools skyrocketed. In fact, their revenue nearly quadrupled in the first 9 months of the year, although the company is still unprofitable. I don't have a confirmed date for you yet, but when it does trade, it looks to be priced between $9.50 and $11.50. Next we have Seer, ticker symbol SEER. This company develops protein analysis tools and looks to commercialize proteome research products, starting with its initial product, the Proteograph product suite. I don't have much details on the product at this time, but its first Proteograph was delivered to one of its first collaborators in October 2020, and the company expects to place another Proteograph with a second collaborator before the end of the year. Seer looks to start trading on Friday with pricing expected to come in between $16 and $18. Next we have a biotech named Silverback Therapeutics, ticker SBTX. The company focuses on cancer treatments with its lead candidate currently in a phase 1/1b trial for advanced or metastatic solid tumors, with an update on interim data expected in the second half of 2021. With it being at such an early stage, keep in mind it could take years at best to get anything to market. Silverback also looks to start trading on Friday with pricing expected to come in between $17 and $19. We have another biotech next, this one's Sigilon Therapeutics, ticker SGTX. This company is also an early stage biotech with their lead candidate being designed to prevent bleeding episodes in patients with hemophilia A. They just recently began a phase 1-2 trial, so again, really early on in their development. The company looks to also begin trading on Friday with pricing expected to be within a range of $17 and $19. In rounding out this week, we have another oncology or cancer biotech, Kinnate Biopharma, ticker KNTE. Kinnate's lead candidate is a rapidly accelerated fibrosarcoma inhibitor for the treatment of patients with lung cancer, melanoma, and other solid tumors. This company is also early on in their development, as the biotech is now just expecting to file an investigational new drug application in the first half of next year, meaning that they have not yet started any trials yet for their candidate. The biotech looks to start trading on Thursday, with pricing expected to come in between $16 and $18. Switching to the lockup expirations, I did put together my usual chart that lists them for you, as you can see. This company, we have 3 companies with locked up shares expiring on Tuesday, those being Shift4 Payments, Applied Molecular Transport, and Data Nexus. And then the following day we have Calliditas Therapeutics and Legend Biotech, each having their pre-IPO locked up shares expiring. Okay, moving on. We have some big news from two of the more widely anticipated companies looking to go public by the end of the year, Doordash and C3.ai. Let's start with Doordash, as we've talked about them in a couple of videos so far. One in last week's IPO This episode where we previewed the big companies coming out soon, but we also had a dedicated video on them that I put out the day they filed their S1 form. In that video, we went over the highlights from the filing that gave you a look into their business model and financials. So if you haven't seen it yet, you might want to check it out. And I've already started putting together a more comprehensive video with more of my own personal analysis that I'll release right before they start to trade, so stay tuned for that. But today, we got some information from the company by way of an updated filing. In that filing, the company has set terms on how much money they look to raise in an expected pricing range. So starting with the trading range, Doordash expects to price their shares between $75 and $85 and will be listed under the ticker symbol DASH. If they do end up pricing at the midpoint of the range at the 33 million shares they plan to offer, they would raise $2.8 billion. If that happens, it would give the company a valuation of up to $30.8 billion on a fully diluted basis. For some comparison, Doordash's last private valuation was $16 billion as recently as of June, so they're ambitiously looking to double that number off the heels of the rapid growth they've seen from the pandemic. As far as to when they look to trade, nothing confirmed, but it's looking like next week will be go time. And I'm also hearing that the date could be Wednesday, December 9th. Now keep in mind that information on pricing and dates with IPOs are fluid and change often, so definitely stay tuned to the channel with your notification bell turned on, as I'll update you guys with information as soon as I get it. Next is C3.ai, a company that we've yet to talk about on the channel except within the comments. This is an intriguing company that, to me, is right up there with the 5 big unicorns that I talked about in last week's episode. I decided to leave them out of that video mostly to keep the video from being any longer than it was, but also because unlike the other companies, they were looking to raise less than $1 billion, so I made that the cutoff. And even then, their timing caught me the most by surprise, but I knew when they did IPO, I had every intention of covering them. For today, I'll give you a quick overview of the company and give you the latest out of their updated filing, which also dropped today. For some background, the company was founded in 2009 and is an enterprise artificial intelligence software company. According to the company itself, they provide software as a service applications that enable the rapid deployment of enterprise-scale AI applications of extraordinary scale and complexity that offer significant social and economic benefit. All of their software applications can be deployed on Azure, Amazon Web Services, the IBM Cloud, Google Cloud Platform, or on-premise. As to their products, they offer 3 primary families of software solutions that, depending on the product selected, can allow customers to rapidly design, develop, and deploy enterprise AI applications of any type, as well as offer business analysts without data science training to rapidly perform data science tasks such as building, configuring, and training AI models. Now, for the past few years, we've heard about AI all the time as far as it being a huge growth area. As for that opportunity, C3.ai sees a total addressable market estimated to be $174 billion in 2020, growing to $271 billion in 2024, a 12% compound annual growth rate. Now, so the company itself, they have total revenue of $156.7 million in the fiscal year ended April 30th, 2020, compared to $91.6 million in the fiscal year ended April 30th, 2019, representing year-over-year growth of 71%. And over the same period, their subscription revenue grew by 75% from $77.5 million to $135.4 million. C3.ai reports that the bulk of their revenue accrues from subscription software, accounting for roughly 86% of their total revenue. Some of their bigger named customers include Shell, Koch Industries, the U.S. Air Force, Raytheon Technologies, and AstraZeneca. From an overall net profit or loss perspective, the company reports net losses growing to $69.4 million in fiscal year 2020 from a loss of $33.3 million in 2019. So that gives you a little background on the company and some of its financials. As far as the details of the IPO itself, this is where we got some new information from the updated filing. At the midpoint of the proposed range, C3.ai would command a fully diluted market value of $4.3 billion. The company plans to raise $504 million by offering 15.5 million shares at a price range of $31 to $34. And of the offering, this is where it gets even more interesting. Both BlackRock and Capital Research Global Investors look to buy a combined 20% of shares in the offering. And then on top of that, Koch Industries and Microsoft intend to purchase a combined $150 million in a concurrent private placement. Obviously, there's going to be some strong demand on this stock. I'll keep you updated on an upsizing of the IPO, which I really expect to happen. C3.ai also looks to start trading next week under the ticker symbol AI. And I'm also hearing that first day of trading could be on Wednesday, December 9th. Again, that could change, but since I did hear this, I wanted to share it with you. And as we get closer to the actual IPO, like with Doordash, I'll make sure to keep you updated with new information as soon as it comes out. Alright guys, there you go. I hope you liked the video, and if you did, please push that like button and feel free to share with your friends and on any of your social media sites. And if you're new to the channel or just an occasional visitor, we'd love to have you join the community. It's totally free, you just gotta press that little red subscribe button. And with that, I wish you a good week of trading. Thank you for watching, and until next time, have a great day.